accounting scholars, how are you doing? We are now at section 2 of chapter 13. We talked about the advantages and disadvantages of sole proprietorships and partnerships. And now we're going to talk about the advantages and disadvantages of corporations. Corporations, as we mentioned in section 1, have one huge advantage over sole proprietorships and partnerships, and that is limited liability. A corporation, in essence, is treated as a separate person, if you will, by the state and the federal government, with rights and responsibilities. As a result, there actually is what's called a corporate veil or corporate wall between the assets of the corporation and the assets of the owners of the corporation, whether that be an individual or that could be many shareholders. As a result, if there is a wrongdoing or harm that occurs through the business that injures a person or individual or group, when the corporation is sued, the only thing that can be, or the only remuneration that an individual can have needs to come from the assets of the corporation. It cannot be extracted from the assets of an individual who is an owner of the corporation and or the other shareholders associated with the corporation. So limited liability is a major advantage. The second advantage of a corporation is the ability to raise money, or the ability to raise capital. People generally, because of the structure of the corporation, the traditional issuance of stock associated with a corporate entity, people can relate to this, and as a result, there are clearly defined methods of investment and clearly defined methods of ownership in terms of percentage of ownership. Last but not least, a corporation is a infinite type of entity, and that I mean it has unlimited life. In a sole proprietorship, in partnership, if there is no accommodations made for the business to move on after a sole proprietor dies or the partners die, the entity basically ends. In a corporation, the corporation continues to exist until it is officially ended by the owners, whether the owners are living or dead. Some of the disadvantages of a corporation are it's because it is an entity, because it is recognized by the state and the federal government, there is traditionally much more in the way of regulation. This is very true as it relates to corporations that go public, or by that meaning corporations that issue stock to the general public on the stock exchange, like the New York Stock Exchange or the NASDAQ. Very specific types of regulations that are associated with especially a large corporation. And the second major disadvantage is double taxation. As I mentioned earlier, with a sole proprietorship, any earnings that occur are only taxed once. With a corporation, you literally are taxed twice, and that's most corporations that exist, most corporate forms. And we can get into the different types of corporations in a little later in our discussions in class. But for a traditional corporation, there's double taxation, meaning that the earnings that occur in the corporation are taxed at the corporate level, and then when dividends occur, when those earnings are distributed to the owners or the stockholders, they're taxed again on the private personal tax returns of each individual or shareholder. So that's an onerous disadvantage of a corporation. Okay, let's move on. Let's talk about how partnerships determine how profits and losses will be allocated to the partners. And there essentially is 5 ways that profits and losses can be allocated to partners. So I'll take each one of these one by each, and please make sure you get this in your notes. First of all, the first way for profits and losses to be allocated is what's called a fixed ratio. In a fixed ratio, you allocate profits and losses according to some determined fixed ratio. So a partner may invest in the business, and you say, well, as a result of that investment, you're going to get a 10% stake in my particular business, and therefore all profits, you're going to get 10% of the profits, and also you're going to get 10% of the losses. So that's predetermined in the partnership agreement. Second way to allocate profits and losses is what's called the ratio of capital balances. Okay, I'll say that again. Make sure you get this in your notes. The ratio of capital balances. And essentially, this is an allocation of profits and losses based on the relative amounts in the partner's capital accounts. So let's say we start a corporation. You invest $50,000. I invest $50,000. That means the ratio of capital balances is 50% to you, 50% to me, and then therefore profits and losses would be based on those relative amounts. Okay, a third way is something called salary allowances. Okay, again, the third way is salary allowances. And here is the mechanism where profits are allocated to compensate partners who are actively engaged in managing the business. So salaries would be taken from the company, and those reflect not only, let's say, the equity investment, but also reflect the activity of a partner in the business. Let's say you invest with a partner in the business, and the partner says, "Hey, I've got another job. Why don't you run the business full time?" So if you're going to do that, and you're going to be the most active, you're going to also be compensated on a salary basis. A fourth way to allocate profits is interest allowances. And in this particular case, in the interest allowances, there's an allocation of profits to compensate the partners who have invested heavily in the partnership. So if you have a rich uncle and he's providing, or he's providing, or a rich aunt, or he or she is providing most of the investment in the business, you would allocate more of the profits because that particular person is incurring more risk, and therefore should get more than the traditional share of the equity invested. Okay, so those are the 4 basic ways. In reality, the 5th way is a combination of any of the above. Because of the type of business structure associated with a partnership, not that it's loosey-goosey, but it has more flexibility than, let's say, a corporate entity, and therefore you can be relatively creative in terms of how profits and losses are allocated. All right, guys, that's a mouthful, and we'll be talking about all of this in class tomorrow, and also please make sure your notes are in your folder so that you can get full credit and be ready for the quiz.